Hello, everyone. If you've been watching the page during this afternoon, you will know that this is our third time trying to get this Zoom to you guys, but I think we have it. So we're just waiting for Antoinette to join us, and then we will be getting started. Hey, and she's here. She's connecting to audio, and once she unmutes, we will be live. Awesome.
Hey.
Hello.
Hello.
All right, we made it. Third time's a charm.
Yes, we
So
are
we're
here.
just gonna do a quick voice check, make sure that we are being heard and seen. Just to make sure you guys can hear us and that it is showing up on the Wealthfluential Facebook page. We're so happy that you guys could join us. So just waiting a sec to make sure. Yay, I got a thumbs up. Someone said, yes, this sounds great. Awesome.
Awesome.
All right, we're here. Well, first of all, thank you guys so much for joining us. Today is Wednesday. We are going to be doing Wealthfluential Wednesdays every week. And there is no better person for us to kick this off with than my friend and partner and lender extraordinaire, like mortgage, everything you need. She has got it. It's Antoinette Pender, also known as Your Mortgage Lady Net, everywhere social, and that is her website. Thank you for joining us.
Thank you for having me. I'm so excited.
Me too. So I don't know how many conversations you and I have had about the industry, about our clients, where we said we should be recording this because this is good information. So I hope that all of that passion and intelligence that we have between the two of us comes across, because I know there's so much information that we share that is beneficial for our clients. And
yes.
That first topic, I think, because I get it a lot, is whether or not a 640 credit score is enough when you're looking to purchase a home.
So, that is a loaded question. Everybody asks, like, what is the magic number for a credit score? If I'm looking to buy a home, what is that number? Like, if I get this credit score, can I buy a home? And I do want to preface all of this by saying credit is not the only thing that will qualify you for a mortgage. It is a huge factor in qualifying you for a mortgage. However, it's not everything. So we're going to talk about some things that's directly related to credit, but just remember there are other factors, but your credit score plays a huge part in it. So a couple of things that I wanted to say about credit. Some of the things that credit helps to determine for you based on your loan is, first of all, the loan type. So what type of loan that you have. Is 640 enough? Yes, 640 is like the baseline. If you ask me what score should I have, my recommendation is at least a 640. Yeah. Now, you can buy a house with less than a 640 credit score.
Yes, you can.
But you're going to pay more money, and you're not going to get the best loan terms, and you won't have that many options. Is it possible? Absolutely. But we'll talk about in a little bit, the difference between having a 580, having a 640, or 720 score. So yes, you can buy a house under 640, but at 640, the credit score is going to tell me what type of loan that you can get. If you have under a 620, you can only do an FHA loan.
Yeah.
That's the first thing. So conventional loans, even USDA, I know they say you can go down like low on USDA, stuff like that. VA even, honestly, if you're not at least a 620, you can't even get approved for them. Like that's not even an option. And then, so there you're going to be, you can buy a house, but you're stuck at FHA. FHA is not bad.
Yeah.
But FHA A lot of times you're going to pay more in your mortgage. The criteria is a little tougher. And then in the real estate side of things, sometimes sellers don't want FHA. They don't want a buyer using an FHA loan. It all depends. Now the market is shifting a little bit. So, I won't speak to that, but it is shifting a little bit. We do close FHA loans actually quite often, but it is hard sometimes to get that offer approved if you can only go FHA. So that's the first thing. Outside of what loan that you can do, the program eligibility, your credit is going to determine if you're eligible for any programs. So I'll give an example. Right now, there is an amazing program out for what the state of Florida has considered hometown heroes. Okay. I'm going to put this plug in here because somebody might be listening, and this program is amazing.
Yeah.
This program requires you to have a 640. It's not me as a lender. It's not any lender's requirement except for the program. And so there are some programs that are out there. People are always asking for down payment assistance, stuff like that. Anything like that, it's going to require at least a 640 credit score. You cannot go lower than that. They don't want you. They're not going to give you any money if you don't have at least a 640 score. There are specialty programs out there. Like we have a very, very amazing investor loan, which used to be, down to like 500, but because things are changing, you now have to have at least a 620. And if you're under 660, it's going to limit how much of a loan you can get. So those are things that the credit score determines. It's going to determine what type of loan. It's going to determine if you can qualify for any programs. It will determine your interest rate. A 580 credit score is much different than a 720 credit score. And the interest rate determines your monthly payment. So your credit score, having a 640 versus having a 720, is it enough? Sure, it's enough. Yeah. But you can potentially have a much lower payment just by having a better credit score, just by taking time to fix your credit.
So it sounds like, if I distilled it all the way down, that your credit score can directly impact how much house you can afford.
Absolutely. Okay. Absolutely. Because once you know your score, and there's so many factors, we don't even have time to get into it, but there's so many factors that go into being qualified for a loan. However, that main thing is going to be that credit score. Not only your credit score, the things that are listed on your credit. You can have a 720 score, but you're disputing $8,000 worth of debt. You can't buy a house with disputes. Those are things that need to be cleared up.
Can you say that again? Can you say that again?
Yes, I can say that again. You can have a 720 score
and
be disputing $8,000 worth of debt, and you cannot get a loan. We're not going. So let me give it to you like this. You owe somebody else money.
Yeah.
And you're disputing that you're even going to pay them, but you want us to give you $200,000-$300,000. Honestly, think about that. If somebody was asking you for money, but for a fact they owe somebody else and they don't want to pay them. I'm just layman's terms, because people don't think about it like that. You just want a loan. Yes, those are things that need to be cleared up before you come and purchase or apply for a loan, because I'm going to see it. Yeah, you have a great score. I can't even fight with underwriting about that. You have disputes. And sometimes you can talk to that. If you remove the disputes, that score could drop. So you need assistance getting those things cleared up. It's not just the score, it's your entire credit profile.
Yeah.
That is important. That is huge for a mortgage, because we look at the whole picture. We're going to look at everything.
Yeah, absolutely. So I'll just say, my background, being a realtor, working with clients and lenders, and then sending them off to go get credit repair. And then them maybe disputing, removing accounts, but if they remove the wrong type of accounts, their oldest account, right? Disputing things that actually were helping their score, but maybe you had a missed payment. There's other ways to handle it. those were the things that made me feel like, okay, we have to be able to do this a better way. People need to
Right.
understand. It's not just, oh, I can get the letters myself and send them out and dispute, but you
Right.
have to understand how a lender is going to look at your full credit profile to determine whether or not you pass one of the criteria towards getting a loan.
Right.
Yeah.
I want to say to that too, like, everybody has like, oh, 700 Club. Like that's the hashtag to have, 700 Club.
Yeah.
And I have seen people in a better position to purchase a home with a 640 than someone with a 720, but with like a huge amount of debt. Because like I said, there are other factors that we won't have time to get into today, like your debt to income ratio, things like that. So I do want to say that 640 is enough. That credit score, it is enough.
Yeah.
But it's not the best. So, you know, like you can have like basic, better, best kind of a situation.
Yeah.
Basic would be like a 580. Like, yeah, you right there. And it's going to cost you more money to purchase a home than just by fixing your credit and having a 640. But at a 640, yes, you'll have more programs available to you now, but you know, there might be a fee for you to get that rate versus a 740. Now you're having the best rates that are available. You know, you may not have to pay for a rate because there are things that you can, some rates cost a discount points.
Yeah.
The background, all of that is based on your credit. All of that is very important. So having the best score that you can have is definitely the goal. But also if you're ready to buy and you're in a position where you can add a 640, even at a 620, if that's where you're at and you have the funds to go ahead and do it, yes, the best time to buy is when you're in the best position to buy.
Yeah.
Absolutely.
So can we put some numbers around this? Can you give us some examples? I know you're great at when I need some deep dive. I'm like, okay, so let's say I have 620.
Okay.
I have a 620 credit score. I want to buy a house that's $350,000.
Okay. I'm going to put my numbers in right now while we're talking.
Okay. All right. All right.
And this is a 620. So we're most likely you're going to be doing the FHA.
Yeah.
Because, you know, a 620 conventional is very, very, very hard to pull off. I just, I'll be real with you. You got to put at least 5% down. And there's a lot of different factors. So let's just say FHA, 3.5% down. All right. And you have a 620 credit score.
Yes.
So you would be looking at, in terms of interest rates, right? You'd be looking at a rate of, and I am in real time right now looking at rates.
These are today's rates.
These are right now, yes.
Okay.
Based off of 620. So if you had a 620 score,
yeah,
you could get a interest rate of, let's say 5.625.
Okay.
Right? We said 620. So 5.625, and it's going to cost you, 5.625 will cost you $4,296.
So
right?
that's just for me to be able to
get a rate.
Get that rate. If I don't pay the $4,000, my rate would be something else.
If you don't pay the $4,000, there's no options.
Oh, wait.
So right now at a 620, there's no par, because when you're getting a loan, there's an option for the par rates. That means it doesn't cost you anything. You don't get any credit back. There is no par option.
Okay.
At this rate. Okay. Yes. So that is the lowest discount point, and that means that you're paying just to get the rate to be able to get
just to be able to get a loan.
Yes.
Period.
So and that is where it is right now. A lot of people are doing it. So now it's just how much are you going to pay though? You see what I'm saying? So with that one, you're paying that's 1.25%, which is I based it, on our numbers, $4,296, right?
Okay.
All
right. Now, where do I want to go? How high can I?
Let's do 720.
720. Let's say I made it to 720. I increased my credit score. Worked got stuff. I come to you. I don't have any disputes. I'm ready to go.
And I'm excited about it.
What do I look like now?
Okay, so now we're gonna go in, same scenario, nothing
Yes.
changed. Nothing changed in the
$350,000
numbers.
house. I'm ready to go.
Nothing. Same process, same numbers. Now your rate is looking like, we'll just say for the same rate, right? 5.625. It's still gonna cost you, because again, that's where we are in the market. For
Right.
5.625 though, it's only gonna cost you $2,148. So you're
Okay.
gonna save. Now there
That's
is
literally half.
it's half of that. And that's probably one of the best rates right now for that,
Okay.
for a 720. Now,
right.
I've seen people with 800 scores. I actually have clients with 800 scores. So I get so proud when I see an 800 score. That's
Yes.
not it's like a unicorn. It's not a common thing, but
No.
let's see. Let's just see, because I don't want a hashtag 700 club. I want hashtag 800.
Exactly.
Take me to the top. So let's just see. I literally have like several clients right now, and it's just a beautiful thing to see. So if you had an 800, just so we could see the difference, 800 score, FHA, same situation. What we said, 5.625.
Yep, 5.625.
So at 5.625, it's gonna cost you about 1,500.
Okay.
1,500. And this is all not upfront. This is all like in your closing costs. A lot of times you're already paying this. People are paying it. They don't have lenders that are explaining it to them.
That's it. They
So
just tell you this is what you need to.
Exactly. So don't be frightened about it. We're educating you.
Yes.
We're putting you on game. Okay, or whatever you want to say.
No, it's
We're helping you out. You have to be educated when you're making purchases or doing anything as a consumer. You should know what's going on.
Yes.
I'm not that lender that's hiding stuff from you. This is what it is. I mean, it is what it is. Now, could you buy the rate down? Yes. Could you get a lower rate? You could. Yes, you could. Let's just say with an 800 score, just because I'm here, you were paying $4,000 before. So if you wanted to pay that same amount, you can, instead of 5.625, you can get a rate of 5%.
Okay.
And that's gonna be probably close to $80 a month you save on your mortgage.
Right.
Maybe even more. So
for 30 years, $80 a month for 30 years. That's
huge. So you can be paying the same amount for a rate, but you're gonna get a lower payment, because I have clients, I rather pay up front, because this fee I'm talking about, it's a one-time fee. It's just in the closing costs, but your rate is forever. So I have people that are like, I'll pay a little bit more to get the lower rate, but if I even went down to 580, it's astronomical. It would probably be like $8,000 just to get a rate. Again, there are people that have the money, and for you right now to get in a home, to build wealth and all in equity, yes, if you can do it, but why not take a little bit of time, work on your credit, and then be able to go in a better position? It's going to save you money. It's going to save you in your closing costs. If it could save you a few $1,000s, that's moving costs. That's down, payment on your electricity. Absolutely. I'm all about strategizing your funds and doing what's best. So let me say this. Okay. If you are looking to buy a home, please get with somebody who knows what they're doing first. If you're going to come to a lender, yes, I recommend coming to me first, because then we can see where you are. You see what I'm saying?
Absolutely.
Yeah. You come to me first, because again, it's not just the credit. So if we put a whole picture together and I say, okay, yeah, you do need to work on your credit profile, and we can do some things. Sometimes you don't. And I know y'all gonna think this is gonna be crazy, me saying this on live with my friend and my partner here, but we're not into getting money from you and doing stuff that you don't need. That's something that we have always, we're like that, period. We've told people we can't even work with them because it doesn't make sense. It's not gonna benefit you. We're not trying to take anything from you or make you waste your time or waste your money if it's not beneficial. If you come to me and all you really need is to really take some money and pay some stuff down, you don't need Wealthfluential's services. And that's okay. That's okay.
Absolutely. And we'll tell you the same thing. We've reviewed
Mhm.
credit reports, and if you're on time with all your payments, you don't have any collections or judgments or a whole bunch of inquiries. The only thing you have is high balances on your cards. You don't need credit repair. You need to build your credit. You need to reach out to those creditors who you've been paying on time and ask them if they can increase your credit score. I mean, if they can increase your credit limit so that your utilization can go down, but you don't need credit repair. And we will tell you that. But we will also tell you if you can save $4,000, $2,000 upfront cost when you're closing, we're going to tell you, yeah, it makes sense for you to invest 3, 6 months in credit repair so we can get that score up so you can be in the best position possible. That's what we're here for. That's what we're
That's
here
what it
for.
is. And the whole thing is, I'm really big on, I'm a strategist. So yes, I'm a loan officer, I'm a mortgage loan professional, but I deem myself as a mortgage loan strategist, because if you have a strategy and you know where to focus and you know where to put your money, then you're going to be in a better position. I've personally done this years ago before I even got in the industry. I've had clients do it. If they would have called me like 3 days sooner, you know what
Yeah.
I'm saying? Like you look on your credit report because you got Credit Karma, which y'all stop. Anyways, I'm gonna let you talk about that. Stop it.
Okay.
Just stop it. It's not accurate. It's not accurate. The numbers are off. You
Yes,
know,
they
the
use a
best
different
thing.
system. They use a different weighting and scoring system than what is the industry standard. Those are great companies to use if you want to monitor the activity
Yes.
on your credit. But those numbers that they give you do not mean anything.
Thank you.
Okay.
I just wanted to make sure y'all knew that. Now, like she said, monitoring, yes. If you come to me and you say, okay, I'm ready to buy a house, you put a loan application, that is the first step.
Period.
Not to call a realtor.
Because I'm going to send you.
You really don't need a realtor first. Okay. You need to know what you can buy, your buying power. How much can I afford? Because you don't, one thing being pre-qualified does, it saves you from heartache. Because you're going to go out here looking at houses that's $500,000, but you can't. And it's okay to not be there yet. You're at 275. And that's fine. You need to know your and target where you can go, because you don't want to be wasting your time, wasting your gas is high. You don't want to be wasting nobody's time. It's something that you don't, you want to be targeted because you don't want to miss a deal either.
No.
Because you're looking at something you couldn't afford. You get pre-qualified first. If you come to me and your score is 628, and I'm looking, and if you have a lot of high balances and you pretty much just need to pay some stuff down, there's something we could do called a credit simulator. We've already run your credit because it is a hard pull. There is no way to get a real pre-qualification and not get your credit pulled. I get that question all the time. Can you not pull my credit? I cannot help you at all. I have to see your credit because I have to know. It's not a soft pull. It is a hard pull because it is a real score. Those soft pulls are not accurate. You have to get a real pull for me to see. I'm not pulling it 18 times. I'm pulling the 3 bureaus once each. Equifax, Experian, TransUnion. That's where we're going to put a tri-merge. When you have 3 scores, whatever the 3 scores are, we take the middle score. So if you have a 580, this is really unrealistic, but if you have a 580, a 640, and a 720, we're going to use a 640, even though you have a 580. It's just the middle score. So stop trying to pre-diagnose yourself. You know how you have symptoms and you don't want to go to the doctor because she was like, I already know what it is. You don't know what it is. You don't know. You don't know if you can buy. 90% of people are closer than they think. But your fear is stopping you from applying because you think your credit is so bad. Yes. Apply. If you need assistance further, I can refer you to Nicole. You can do it on your own if that's what you want to do. Absolutely. Don't force you to use anybody, but there is much benefit in getting some assistance from experts who know what they're doing. If it's just paying stuff down, I give you a credit simulator that says, this is your score. If you pay this Capital One down to $50, pay Victoria's Secret off, pay it to $0, and pay off this charge off account. it projects that your score is going to be 652. They are very, very, very close.
Accurate.
They're like within 1 to 2 points.
Very accurate. Very accurate.
Very
For those of you
accurate.
who don't know, Antoinette is also our family's mortgage loan originator. And when we purchased our house, she called my husband and said, I need you to go spend $15 on your Bank of America card. And we did it, and it worked. And here we are. So yes, you need to come to the professionals first, because they have access to all of the tools. That credit simulator that she's talking about is phenomenal. And these are the things that you need to know. You don't know what you don't know, but those of us who have been working in the industry for years, we see the pitfalls, we see we see the paths that you need to take, and we know the strategies. So.
And the credit simulator is free. It's free to apply for a mortgage on my website. I do not charge application fee. I do not charge credit report fee. If we can't do it and you don't want to move forward, it didn't cost you anything. At least you have a plan of action. If nothing else, when you leave from working with me, you're either going to be pre-approved to buy a house, or you're going to have a plan of action that says, if you do these things, then you'll be in position. It might say 30 days, or you might need to open an account or whatever. Or, this is what you need to work on. Here's a referral. If you would like some more assistance, here's a credit repair service that can help you build up so you can be where you are. But you're always going to have a plan, because if you don't know, then you'll never get there. I can't just tell you no. You need to know it's not no. No doesn't mean denied. It just means not yet. And what can we do to get there? And so the reason why I say come to a lender first, I'm going to tell you that stuff about your credit, but I'm also going to look at your income. I'm also going to look at your debt to income ratio, because while you're working with Nicole, we can be working on stuff over here. So when you're ready, and you can jump in and you can be on go and find you a home, because we be determined. We're going to get you ready. It just might take a moment.
That's it. That's it. Our goal is for all of you, everyone who's watching, following our pages, for you to achieve your goals, if it's getting into a home, to get into a home, and most importantly, to be wealthfluential, which means not only fluent in the ways that you can build and generate your wealth, but you're actually taking action, and you're making an impact on your family's life. And then next is the people around you. That is our absolute goal here. So thank you so much. For those of you who are watching, please, if you like this, please like it, share it, click the little notification. We will be here every Wednesday with different professionals and experts giving you information to make your life more wealthfluential. You will absolutely be seeing your mortgage lady Net again. She is one of our favorite partners. And thank you so much, Antoinette. You guys, free gems. You got free gems today. Really good information.
Thank you so much for having me. I'm so excited. I am so proud of you guys. Wealthfluential. These are people that you can trust. These are people you can trust, because there's a lot of stuff going on in the credit repair industry. But I can say that I know firsthand. Sometimes you need a boost, whether you're at 580 or you're in your 6s and you just want to hit 700, or you're in the 7s and you just want to boost. I signed up. Signed up because let me tell you something. I'm going to have hashtag 800 Club.
That's it.
And they're gonna help me. I signed up. They had new clients signing up this week, guys. If you didn't get there before they close off, they're only taking so many. Look, I'm advertising for you. They're only taking so many.
You got it.
So many clients. Get in there, because these are trusted professionals. I know for myself. I vouch for them. You can trust them, and they're going to have your best interests at heart. So thank you for having me on.
Wonderful. We will be placing links so that you can connect with your mortgage lady Net. You can put in your applications if you're interested, which we highly recommend you do if you're looking to purchase a home. And then, as she mentioned, we are in our launch period now. This is a launch window. It opened on Wednesday. It will close on Friday. We are only accepting 60 clients, because we are not here just to take your money and not do the work. We are here to do the work. We meet with you face to face. We meet with you Zoom. We meet with you on the phone. Zoom. We help you create that strategy to increase your credit score. We educate you along the way. We give you accountability. So our sign up link will be underneath this video as well. Happy Wednesday, you guys. Keep pushing. All right. We'll talk with you soon. Bye.
Bye.